Hello and welcome to Money Matters. In the first half of the year, Hong Kong's economy grew 7.8% year on year, and the unemployment rate dropped below 5%. Despite this, Zella Chin reports that some sectors of the economy, such as trade shows and tourism, have yet to recover.
Beautiful works of art. Exhibitors hoping to make a sale. Potential customers browsing. This is one of the few exhibitions held at the Wan Chai Convention Center these days. Stuart Bailey is the chairman of the Hong Kong Exhibition and Convention Industry Association.
So Stuart, how would your members contribute to an exhibition like this?
Oh, look, our members would be involved in everything that you see here. I mean, not just the venue and the organiser, but then obviously you've got a whole pyramid of subcontractors that come underneath that. So people who have laid the carpet, people who would have built the stands, the lighting, the audio-visual suppliers, the freight forwarders, the registration.
So how would the visitors now be different from before the pandemic?
Normally at a fair like this, you would see people from all over the world. What we're seeing this year is purely local. So everybody here is a local gallery and a local buyer, which obviously affects the economic effect of such an exhibition. And you can see it's much smaller than it might normally be.
Stuart says the exhibition and convention industry contributed over $58 billion to Hong Kong's economy in 2018, before the protests and pandemic. And the city held 138 exhibitions in 2018, compared to only 25 last year. That dropped more than 80% because of border closures and social distancing restrictions. In 2018, the industry employed 77,000 people. But the pandemic and the lack of exhibitions has been a big blow to the industry.
Yeah, look, we're certainly seeing a lot of companies that are laying off staff. Some of the smaller organisers as well have closed their businesses, waiting until such time as they can reopen. Some of them, sadly, probably won't reopen at all.
In the last year and a half, some exhibitions have pivoted online.
Virtual cannot replace face-to-face exhibitions. In terms of economic activity, we don't see that they generate that, and so therefore exhibitors aren't willing to pay to be in a virtual exhibition.
The government allocated more than $1 billion of anti-epidemic subsidies to help the sector.
But these are life support measures. All of these are keeping us going for a little bit longer. We still will not survive until we solve the question of how to get international participants to come and be involved in trade shows and exhibitions in Hong Kong.
Over the summer, the lobbying group surveyed its members and found that 45% of them expect to shut down in a year, unless the border restrictions are relaxed or abolished.
Before the pandemic, Hong Kong used to have 56 million visitors a year. And now, with strict border controls of up to 21 days of quarantine, the number of visitors has dropped by 94%. And that has hurt Hong Kong's economy.
Tommy Wu is an economist at a consulting firm. He says consumption by international and mainland visitors used to make up 10% of Hong Kong's GDP.
They will be spending on hotels, food, restaurants, that kind of thing. And also for the tourists, they will be spending on a lot of the consumer goods, including luxury goods. Basically, without any inbound tourism, that 10% is gone.
The hotel sector has suffered from the loss of visitors. And now it depends on the local market.
This is the lounge area.
Luke Boland is the general manager of a 46-year-old establishment in Causeway Bay.
So Luke, this is a very beautiful room. What sort of travelers use this room?
Well, this is our Park Lane suite, so we're quite proud of it. It's very popular with the business travelers, especially those who come for a longer stay to Hong Kong. Now during the staycation, it's couples who want to spoil themselves, for a special day. Definitely the wedding couples love this suite.
They want to splurge?
Yes, it's...
So how is the business traveler segment different from the staycation visitors?
Well, a business traveler comes to Hong Kong to conduct business. So the hotel becomes a base where he relaxes, rejuvenates, and then he goes out in the city and does his business, his meetings. A staycation traveler comes to the hotel to escape the city, to enjoy every single service the hotel has to offer.
So you're making more money off of the business traveler?
Yes, in all fairness.
I can see why you want them to come back.
Absolutely. Well, not only for that reason, it's also because we have that consistent business 7 days a week, while the staycation, it starts on a Friday, it peaks on a Saturday, and then again we have these 4 or 5 days which are pretty flat.
The hotel occupancy rate was 90% in 2018, compared to 30% now. The one bright spot is the catering and restaurant side of the hotel business.
So, Luke, do you have a lot of people coming to your restaurants nowadays?
Well, yeah, thanks God. First of all, our staff are 100% vaccinated, which allows us to operate under the Type D. That means, we can take tables of 12, we can take functions up to 240 people. And the people appreciate that because with local people not being able to travel, we see them spending more and more time and money in the restaurant.
Revenues at the hotel dropped to 75% since 2018, and the number of staff was cut from 440 to 360. The hotel managed to break even with the help of $21 million in government subsidies in 2020 and the strength of the restaurant business in 2021.
Well, we survive, but this is operating profit or operating break-even. It doesn't mean after taxes and all the other expenses are paid that owners are actually making money in Hong Kong at the moment.
Luke wants the borders to reopen to bring back business. At a recent media briefing, the chief executive said the government was working on quarantine-free travel.
We have made it very clear that our focus will be opening the border with the mainland. Hong Kong people need to go to the mainland. Of course, international travel is important. International business is important to us, but by comparison, the mainland is more important.
Luke welcomes an open border with the mainland.
2017, 2018, 80% of the arrivals in Hong Kong were from mainland China. The opening of mainland China will be absolutely a lifeline.
Ease of travel between Hong Kong and the mainland by itself won't help the exhibition industry, says Stewart. International borders also need to reopen.
We're not going to be able to get Chinese buyers to come if there are no international companies at the fairs that are taking place. They're not going to travel down to meet with local Hong Kong suppliers. They need to see international people. So it really must be from both sides. We can't have one without the other.
For Hong Kong's economy to fully recover, we do need our borders to open or quarantine restrictions to ease to allow more tourists to come in order to support, say, retail sector. For business travel to come back, that by itself will already contribute to Hong Kong's GDP. Also, from a standpoint of being an international financial and business hub.
He says the economy and other business activities can't return to the old normal without open borders.
China's economy grew slower than expected in the third quarter as power outages and supply bottlenecks hurt factories. Sporadic COVID-19 outbreaks weighed on consumption. Gross domestic product expanded 4.9% in the July-September quarter from a year earlier. That was slower than the 7.9% in April-June and compared with expectations for a rise of 5.2% in a poll of economists. That was the weakest reading since last year's third quarter, when GDP also grew 4.9% and marked a further deceleration from a record 18.3% expansion in the first quarter. China's property investment rose 8.8% in the first 9 months of 2021 from a year earlier, slowing from 10.9% growth seen in the January-August period. Property sales by floor area rose 11.3% in January-September. New construction starts measured by floor area fell 4.5% from a year earlier versus a 3.2% drop in the first 8 months. Funds raised by China's property developers grew 11.1%, slower than the 14.8% rise seen in the first 8 months. China's property market, a key driver of economic growth, is under growing pressure as more debt-laden developers such as China Evergrande struggle to avoid defaults and home sales weaken. China's central bank said that the debt problems of the China Evergrande Group are an individual case, and the real estate sector is generally healthy. The cumulative turnover of China's Beijing-based over-the-counter equity market has reached 152 billion yuan so far this year. The National Equities Exchange in Quotations, or NEQ, also known as the New Third Board, registered turnover of 5.88 billion yuan in the transaction week spanning October 11th to 15th. There are 7,254 companies on the board. Launched in 2013, the board aims to offer small and medium-sized enterprises a new financing channel with low costs and simple listing procedures.
When Money Matters returns, how green investing really can be green, as in sustainable and profitable. Stay with us. Welcome back to Money Matters. From green bonds to ESG funds, environmentally friendly investing has grown ever larger in Asia. From the standpoint of an individual business along with Asia-focused investment funds, the sector is now seen as a moneymaker. Now Hong Kong is working hard to become Asia's green investment hub.
I used to work in environmental protection and have seen various projects around the world such as solar, wind and hydropower energy, landfills and so on. The only attractive thing to me is reverse vending machines.
Andy Ho started introducing reverse vending machines, or RVMs, from mainland China to Hong Kong in 2018. There are now more than 170 of them in shopping malls, schools, and the community. They recycle plastic and glass bottles, aluminum cans, and paper cartons. So far, they have recycled over 1.6 million items.
When we finish a beverage, we put the container in an RVM. It would read the barcode to determine whether the container can be recycled. A refund is then given to the consumer. In my experience, there is a market for RVMs in Asia. RVMs are expensive. Manufacturing them in Asia gives us an edge. I wanted to introduce them to Hong Kong or find a factory in Guangdong to make them to lower cost so there will be better chance for promotion.
The pandemic has affected the global economy. Despite being in the fast-growing environmental industry, Andy Ho's business was not immune to the ravages of COVID.
Since the pandemic, everything stopped for almost 2 years. Our business suffered. The amount of plastic bottles has not shrunk, but fewer business partners are willing to work with us because they are also suffering. In this downturn, I don't think many companies can survive.
The company's business has dropped by half over the past 2 years. Andy has decided to venture into recycling batteries, formula milk powder cans, and cosmetic containers. He thinks that's the future trend and hopes financial institutions can offer support.
Of course, we are a commercial operation. We hope financial institutions can support RVMs with financing. There are loan repayment installments for cars and electrical appliances. We can let banks see that RVMs are widely promoted in the public, creating economic benefits in the process.
To sustain the development of environmental industries, the government has been advocating green finance. The latest policy...
We should find out if a fund has actually invested in ESG companies or products. That's number one. Number two, ESG funds won't necessarily outperform the market. There are many other factors at play. Investor strategy should be conservative.
ESG stands for Environmental, Social and Governance. The concept first emerged in 2004 and has since become a hot investment topic. Many of the ESG projects are green bonds. Recently, the EU has raised 120 billion euros with its 15-year green bonds. It was 10 times oversubscribed and became the largest green bond fundraising exercise. The EU plans to raise 250 billion euros in green bonds over the next few years. Many Hong Kong financial institutions are attracted to the prospect of ESG-related business.
First, we'll talk about green bonds, social bonds and sustainability bonds. Hong Kong has issued over US $500 billion this year, some US $100 billion more than last year, and is expected to reach over US $1 trillion by the end of 2021. Asia is catching up with Europe.
His bank has just issued a yuan-denominated ESG fund, boosting their SFC-approved ESG funds to 14, which is a considerable portion of the 60 funds approved by the SFC.
ESG indexes have outperformed emerging market equity and bond indexes, as well as some older indexes in the past decade. Emerging market ESG development is relatively slow in Asia, but they're performing well for two reasons. First, there's the growing demand. Second, ESG has improved within corporations to give better profits.
Over the past 3 years, the MSCI Asia ESG Equity Index has outperformed the MSCI Asia Equity Index at about 4% per annum.
We're not saying ESG is the best. We see companies with stronger ESG inclinations, their stock prices tend to be more resilient in a volatile market. Why is that? Because with ESG, they pay more attention to governance and monitoring, which means maybe their activities are more under control.
Moses Louis reminds investors many companies are using environmental elements as a gimmick, but their business may not be truly environmentally friendly, or they're just greenwashing. When selecting ESG funds, investors should check if there's greenwashing. They should also check credit ratings and other risk factors.
There is no market benchmark auditing ESG. Bonds, something we're more familiar with, have credit rating agencies. The 3 big agencies grade bonds with ratings, but there's no such thing for ESG, no universal standard. Different organizations, fund companies rate them freely using their own methods. It's possible they're grading them differently. It's been like that for years, even in Europe and the US.
He says the pandemic has raised the public's interest in ESG, making these products more recognized by investors in the future.
When the pandemic struck last year, investors started to worry about negative things. People were concerned about climate change. In addition to company financial performance and the outlook, investors were also increasingly aware of their social and environmental impact, and whether their analysis is comprehensive. More people are considering these. We think regulations should be tightened. When they are tighter, ESG investments will become a major trend. Celebrities, including naturalist Sir David Attenborough, joined the Duke and Duchess of Cambridge in London for the inaugural award ceremony of his Earthshot Prize. The honours were established to find solutions to some of the biggest environmental problems on the planet, using new technologies or policies. There's a winner in each of the 5 categories, receiving $1.37 million.
The City of Milan.
The City of Milan won the Build a Waste-Free World award for its food waste hubs, which recover food to give to those most in need. Costa Rica received the Protect and Restore Nature Prize for programs paying citizens to plant trees and restore ecosystems. Other winners included a land-based coral farm in the Bahamas to restore dying coral reefs, a green hydrogen technology developed to transform how homes and buildings are powered, and Indian technology that creates fuel from agricultural waste in a bid to stop crop burning. The Duke and Duchess also met some of the celebrities who attended the awards, such as footballer Mo Salah, who presented one of the prizes. The ceremony came days ahead of the COP26 United Nations Climate Change Summit in Glasgow, which begins on 31st of October.
That's the show. Thanks for watching. Next time on Money Matters, how the social media influencer craze has found its way into the traditionally stodgy financial world. See you then. Good night.